Hello guys, welcome to a Trading Parrot. We are seeing potentially in 1 hour, if we close this 4-hour candle like this, a global breakdown on the RSI that is definitely contributing to complete this double bottom pattern with a neckline at 107.5. In this video, I'm gonna talk about what could be the potential outcomes of this. Of course, as always, I'm gonna give you the bearish and the bullish case. How can this thing actually recover in case you are looking to long support, or if you are already in a short and looking for areas of taking profits to the downside. If we see a breakdown from the neckline, I'm also gonna cover that, of course. I'll talk a little bit as well about the whales that have been depositing pretty intensified in the last couple of days. And yes guys, this is gonna be a little bit longer video. This is your Bitcoin today video, not the usual update I put in the morning and in the evening. So prepare yourself to go into the description and find those timestamps so you can skip to the parts that you find more relevant. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And can we get 1,000 likes as we are seeing Bitcoin coming back down from 110 into potentially 107? Very quickly, I'm gonna look at what others are thinking at the moment, and we can see that Glassnode is pointing out that the funding rates just flip negative. Shorts are quietly building across the top 10, with BNB and ADA both showing signs of pressure. Notably, Solana now ranks as the 6th lowest funding rate amongst all the assets. You can track this on Glassnode Studio. In my opinion, it's not that negative yet, but yeah, it's the first time that we are seeing this. Remember that it's not just a bearish reading of this. Many people say that during a bull market, funding rates being in negative is kind of a blessing to look for a re-entry by the trend. Let's not forget that the weekly and the monthly, I still qualify it as a green. I'm not so sure about the 4-hour, we'll look into that in just a second. Matt is saying, after reflecting on today's spaces, I have decided to sell all my master, MicroStrategy. I originally bought with a small percentage of my portfolio to support the first publicly traded company buying Bitcoin in 2020. But between the terrible response this week and the anti-medium of exchange posting by the MicroStrategy account on Pizza Day, I no longer feel the need to support their Bitcoin journey. Let me know in the comments what you think about MicroStrategy and their approach to proof of reserves. Do you support it? Do you think it makes sense? Or do you smell something burnt by them not agreeing to go in that path? Titan of Crypto is also counting green candles, just like we did with the indicator. And as I showed you recently, being 7 weeks in a row in the green is almost a peak from pretty much 2015. Every time we get to the 7th of the 8th week, we get a retracement. That retracement can be shallow, can be medium, can be just a 10%, in some cases a 40% back in the day, more than 4 years ago. But there is a rule that right after those rallies, so far in history of Bitcoin, we always get continuation. It's almost like you can interpret multiple green weekly candles in a row equals conviction to later buy any dip that we get. Bitcoin Magazine Pro is pointing out that we were 1 day ago almost at 0% of positions in a loss. So that is not something great, guys. It is bullish for continuation, but when everybody is in profits, everybody looks at each other in the room, we acknowledge there is an elephant and someone has to take some profits first, and then there's a second and a third, and that's how you get out of these areas of 0%. The last time I closed along at this level of 0% of people in a loss was when I closed all my holding of spot of Bitcoin at 73.5. Since then, I have built a new position, and in the past few days, we were at that level. At that point, when I sold, there was a confluence with many more indicators. At this point in time, I'm not yet convinced to do something that categoric as I did with 73.5. Let's have a look at the news. In here, GameStop officially confirms buying Bitcoin. This is a 4.7k Bitcoin purchase. That's pretty great to see new companies doing this. I'm just hoping that they're not just going to mirror this. I'm hoping that they do not copy MicroStrategy. They do not go for the leverage path. or the tricky way. I personally don't consider anymore Michael as a Bitcoin max, because if you were max, you will just hold the Bitcoin, put it in a wallet and shut up. But all these tricks, kind of milking the cow or over milking the cow, doesn't really make a clean way for what Bitcoin was intended. It turns everything into an institutional, let's suck the life out of it, instead of being the currency for everybody. Bitcoin whales keep buying as BTC price dips, with targets that include even 94k, which I totally agree. The key points are Bitcoin whales are adding in their BTC positions while the price ranges below all-time highs. If there was a new market correction, we could potentially go into the mid-90s according to this analyst. And if you go to CryptoQuant alerts on Telegram and we go from the 23rd of May, we're gonna see these unusual exchange inflows of 6,000 on the 23rd, followed by 1,000 more, and then 4,000 more. That makes up for over 10,000 Bitcoin coming into exchanges, primarily going into Coinbase Prime. We had a little bit over the 27th. This was yesterday with 1,000, another 1,000. That makes 2.5k, right after 6k again, and 1k. We get back into 10k once again, and this is today with almost 5k again. I don't know if anyone knows. I haven't seen anything on Twitter. Where are all those coins going? I don't mean to the exchange, obviously, but what is the intention of doing with that? Are they hedging? Are they gonna sell it? Is this actually a plan to sell? And when I get into Big Whale Explorer, I'm gonna expand on that argument, because we saw a lot of deposits when we were starting with the rally on the first leg from 74, and we didn't see any pullback since then. So we'll talk about that in a second. We had the FOMC meeting at 7 p.m. UK time. So that's 3 hours from now. And something to take into account is that the Federal Reserve balance sheet has come back up from the bottoms of 3.21 trillion. And that is always something that I consider as the best way to interpret what they want to do. So keep that in mind. After 3 weeks coming back down, there has been a pivot with a higher low, which is good. In terms of the aggregated open interest, we can see that the price probably has pinched back below the highs that we have from before, whereas the aggregated open interest is still there. I'm just going to refresh this once more and see if it has changed in any way. And you can see, let me magnify this, that the price is pinching below, but the aggregated open interest remains there. And that usually, if this particular alpha plays out once again, shows that really we are not going in that direction, because open interest remains elevated. If we see the open interest breaking down below 35.169 billion, that's a different story. At that point, I will let you know that something big has changed and that we could be using this as a liquidity hunt. I really don't want to say that, but if we do that, that is going to look very similar to what we did in 2021, which is we had a top at 65, then one at 69, come back down, liquidity hunt, and then panic in the street. We don't want to go through that route. We just want to go to 35, retest, and push it back up. And I'm struggling here, but I'm gonna look back into the 4-hour time frame and decide if I really want to downgrade the 4-hour. I suspect I will do. We had a bearish breakdown confirmed, and we had an M pattern formed. So I should probably put this back in red. On the daily, I'm very tempted to put it in red. Let's have a look at the charts first. What we can see in here is the RSI that yesterday put a breakout, which I published a video and I explained that we need to be very careful in here because there can be a breakdown. And if there is a breakdown, there is a possibility that we go into RSI 44. That is the global support. Just a few minutes ago, we were at 44 testing, but that has come back below it, and there is just 46 minutes to reclaim this support in here. If we don't, well, we had a breakdown from the highs, another breakdown, and then the final breakdown in here. So that could be hinting that finally we are due for a slightly deeper correction. We haven't had any correction, so when I see a bit bigger, it could be just to get to 100k. We'll see. So far, we are testing the 107, and if you've been watching my videos, 107 has been aggressively defended in here on 24th and on the 25th of May. We put a double bottom and we tried the highs once again, hitting the 110 fair value gap. Since then, rejection as strong as holding the support. So my question, I really want to go go to that order book and see how are we looking as we approach this 107. If things are looking really weak in there, the last line in the sand is how the order book looks when we are below 107. If there's aggressive buying, CBD spikes and all of that, we can reclaim this, and that could be bullish. That could form a double bottom formation on the RSI 4-hour and get the final breakout. If there is no interest on this, it could drop way deeper. Well, but we are here at that level, and I need to update the RSI trend line, because now to get a breakout on the 4-hour, we need to push this line due to the fake out and look for where is now the resistance, which is, let's say, at 53. So let's change this to 53. The 44 that we are pinching, we're gonna visualize it in the price. So we are below that. We need to go back to 107.8 to reclaim that red support of the RSI, and the resistance is at 109.6. Price needs to go all the way back to the fair value gap that we left right there, hit that, hold it as support, so we can get an actual breakout. The previous one was a fake out, so hopefully that one is gonna go back up. But we really need to focus on what's going on at 107, which is what we're gonna do later in the video. On the daily, for the first time, this ascending wedge, which is a bearish pattern, is breaking from the bottom. This is an intra-candle move in here. Therefore, by tonight, if people like what they hear from the FOMC meeting coming in 3 hours, this could get reclaimed and it could still be bullish, right? Yes, the 4-hour is in danger. The 4-hour has messed up massively, but the daily could reclaim this. The RSI on the daily, it's holding this trend line in here and is starting to get even faster momentum to the downside. Now we are further away from doing a revenge rally into 75. From being at 60, we need to claim in one go 15 points to hit this. Can we do it? Like this. It looks very artificial. I don't know if now we can do it. Certainly we have decreased the chances of doing such a move at this point. I am more concentrated in looking where is support for the daily, which I left it at 48. That 48 in the price is at the moment coinciding with this order block, which is 102.5. You can see the red line that is from the RSI. We also have the past week low, and it will be the first time that the wedge doesn't look that perfect and skinny just to the upside. If we go into 102.5 for the daily, we are coming back inside the previous range. We broke out. Coming back inside is not something great, particularly if we put daily closes below 105.7. That is the signal that the shorts are waiting for to say, hey, that's a failure, right? On the other hand, if we manage to hold that 105.5 and get the bulls to really jump in to defend that the price doesn't go to the previous range, okay, great. We look again at the charts, and thanks to the move down, the targets are going up to 120 and the top RSI of the top of the channel at 138. Of course, at the cost of less likelihood that we can achieve that 76 and that 86 on those RSIs. MACD, after the bearish cross that we spot on Saturday, continues with the momentum down. This is starting to look a little bit further away from what we did in 2024 before the last most impulsive move into the new all-time high. Look, this got into 255. Now we are at the 300, not that far away, still doable, but we're kind of pushing it at this point. You can see that the CPR was for 2 days. There was an attempt to reclaim the second level of resistance. This looks like a rejection unless today we put a daily above 109.3. If we close like this, it's gonna really look like a decent rejection, right? We get a neck and we have a pattern that is pretty toppy. That could send us back towards the previous resistance, which was 101.7. Volume continues to go down, and you can see that the open interest pinching the top. So far, it's looking like it's playing out. That is a signal from Axel that I really respect. The last time it didn't play out, but still, I think it's got a very high win rate in my opinion. And here is going to be one of the stars of the show. We saw some deposits on CryptoQuant. Look at this. This is the big well explorer that now is pinching once again to the top. It got to a ratio of 125. Usually the first reading that we get is not settled. This settles once a day as they change the information coming from into the block. And you can see that there has been 33,000 of deposits into exchanges just in the past days. Whereas in terms of outflows, we only have 6K, here 5K and 2K. And I've seen some tweets celebrating that there were some aggregated withdrawals of around 8K Bitcoin. But hey, I'm telling you, 33K. So do the math and see what is the delta, and definitely there are more inflows. And more inflows is a sign of weakness because it means that these large holders are deciding now at this point to deposit. Why? Sometimes it's a false positive, it's something internal in the exchange, but more often than not, these peaks of the ratio coincide with local tops or actual tops of the market. So let's watch out on this in the next days. If you are as addicted as me to looking at the charts and you really want the best experience to look at the charts, including all my annotations at all times, this includes the Big Whale Explorer and many other trading view indicators that I use pretty much every 10 minutes, you can get access to TTP Charts Pro. If you want to give it a try for free, you can see here there's 400 people asking for charts for free, looking at the different levels and all the charts that I show on my videos. How to find it? Well, there's a link in the description for my Telegram channel. In that Telegram channel, you're going to find TTP Charts link there. Once you click on that, it's going to take you to the free version where you can use tons of charts. There is a limit, a rate limit to ask for charts reserved for the pros. If you want to become pro, you go to my Patreon website and you get one of these subscriptions, the Telegram charts or directly the Pine scripts if that's what you want. If you want to get them for free, you can open an account on Bluffin using the link in the description again, start trading, deposit, and use this QR code to validate your Bluffin account with my Telegram bot. By doing that, if you meet the requirements, you can get access to both Pine scripts and Telegram charts for free. And let's go to the SOPR chart that I showed you, I think yesterday I was mentioning that the SOPR is pinching my top band of percentile. I also show you this descending line that we have pinched this high at 113 at the 73.5 top. Then we pinch twice in this area of topping around the 110. And now we pinch once again in the same trend line of 104. I thought that is just a coincidence. This is quite elevated. I also made a point that in this area before the breakout, we were pinching, people were taking too early profits at 65.8 and then the price came back down to 59, but still we went all the way up 80%. That could be still the case in here, but hey, I told you we pinch the SOPR, which means that so many people are taking profits in the green. And that makes a lot of sense after seeing this, where 0% of the people yesterday were in a loss. So some of them have to take profits. Now, who knows if those profits are really going to produce an ultimatum or something like that. But you know, if you are in a swing trade and you are in profit and everybody's in profit, you probably want to know about that, right? Liquidation levels, we have the two usual suspects in here, the 113 and the 100K. We have kind of a middle ground at 105.3. You can see the heel is right there. If we remove the 10x's, that shows that high leverage dudes are here. From 25x into 100x, there is some decent liquidation. So there is a recipe to go into 105k, maybe just do the business there and then bounce back up to hit the 113. That is one narrative. Of course, for that we need to come here, build some ground, some bottom information around this area, prove the point that we are not really wanting to go into 100k and then go back up into 113. So far it's too early, so I'm just telling you that we're getting closer and closer to high leverage traders that enter in a long a little bit too late. In fact, they were entering in a long from 110.5. You can see how the red intensifies as the price goes up and price is now going down just to chase them. We are leaving now, we are getting further away from the top liquidity. We are 5k away from the red there. It all depends how we close this daily candle relative to this breakdown today to see if we still have chances to go in the short term to this. There is a chance that also we go into that 100k that has high liquidity to the 94 that they were calling in that article. That's the target number 2 potential that we need to put on the table and analyze. I think if we go to 100k and we do a retest there and we find strong conviction in here, this red is not gonna last anything. And that is the liquidity that we are currently leaving behind. Observe on liquidation heat maps. Let's look at the order depth to scan for big orders. They are trying to enter at 107.3 with a big large order at the moment. I think it just got filled, by the way. 113 is still there. There are some orders to buy, but not as significant as the ones that they are wanting to sell 107 and potentially break even further down. If we observe for orders larger than 20 Bitcoin in here, we can see that there is kind of a bias towards, at the moment, doing all the selling. They are trying to defend with two levels of 500 and 107. Let's look at the bid-ask ratio that has remained at the 0.2s, still very shallow defense relative to what they were doing in this area. We are at the same level of the price. We are at 107, and they are not defending as aggressively as they were doing in here. Longs have intensified. They have come back in. Those are longs accounts on Binance. We are at 50 from the lows of 30, so that is something. But the limit orders below the price that are expected to defend a deeper fall are not that big at the moment, and that is a problem. So that's why I was speculating that one way that we can really defend this and turn this double top into an actual double bottom pattern is if the price pinches 106, gets bought up aggressively with a substantial increase on the CBD, and then we start seeing this skyrocketing to over 15. At that point, it's extremely clear that all they want to do is trap shorts and go back up into that liquidity at 113. But so far, that is not the case. We have a wall of selling in here. Let's see how big that is. So all wells are kind of getting off as we approach the FOMC meeting. There is almost no cohort at the moment defending things. There is just a little bit bigger, kind of 25-30% bigger than in the morning, wall of selling right above the price. Some orders defending the price at 42, some 15 and 30Ks below the price at 105. So not really aggressive people defending. You can see these two 500s are visible and trading light as well. We left the fair value gap at the top. Let's see if by tomorrow we take the 105 below it. And I haven't touched base on the tops versus bottom. And since I know that there are two different people that like the longs video, people that like the short format, and people that like both, I'm just gonna do the long, assuming that, you know, this is for the people that like longer videos with more in-depth data and cool stuff. If this is not for you, either use the timestamps below or don't watch it and go and watch the shorter version. So this is top bottoms weekly indicator, which you can access for free. It's a couple of indicators. One is visualized with bands and the other one as an oscillator. They are in my TradingView account under scripts. It's open source and I built it like 4 years ago and it's still working like a charm. Look at how the volatility is compressing with each year of Bitcoin. Beautiful visualization. You can see that we have faken out just in 2022 and recently we were slightly below the support. So what this is saying that we have a way to go into the top of this triangle. Each and every time this cycle that we pierce this level, I shouted, sell! And I got 200 views on YouTube and the only 200 people that were watching were saying, you are an idiot. How come you are selling there? We are going to 500K, whatever. But at this point, 73, one of my biggest conviction data points I was using is that we were at the top of this resistance. Sell it, right? The second time we were on 25th of November and the price was around the 105K, 106K. We pinched it twice. The second time we made an all-time high again. And when we started coming back, we knew we have another top. At the lows in here, that was the area to buy. But it was really difficult to think about this because we already broke that from the bottom. So I was thinking, is this gonna go a little bit deeper? So I didn't really use that much this data point. Now that I see it, it wasn't that bad. It kind of was off by a few thousand Ks probably. And now we have done, let's say from a range of 43 from bottom to top, we have already done 28. So there's just a fraction that we could say 1/3 to go up if we are due to use this as an exit, right? In the past cycle, we didn't end the cycle with the band touching the top. We touched it once. The second time we were already lower with a trend line holding it, right? So we didn't use that. At this point in time, we don't know if we're really gonna get to the top of that. But let's be positive that in this rally, let's say it's not finished, and let's just focus on what is the range high that we could do before needing to pierce the top, which is something that we have never done. The bottom is a little bit more flaky now after those two pinches, but the the top has never ever been pinched in the whole history of Bitcoin. So that brings the ratio into a top of, let's say, 30, okay? 30 could be the highest we get with this oscillator, assuming past performance works. So I'm gonna go to the second version, the band version of my top bottom, and I'm gonna put the coefficient, instead of 0.5, which is the default, I'm gonna put it in 0.3, and that is gonna constrain these levels, and it's gonna show me what could be that top of the price of Bitcoin with this particular leg, not necessarily the cycle, but in this leg, we cannot go beyond 125, we cannot, or we have to break the past performance of the whole history of Bitcoin. If we do it, great, you know, and if we see a rejection from there and we go lower, we can have another leg up later, and in that leg up, this band could be maybe at 150, so that's another story, but for now, this leg, can it go higher than 125? According to this indicator, no, it cannot. So let's put this back to 0.5. General markets, let's have a very quick look. You can see that the dollar is still forming that bottom information. I was betting that we could form that. Now we are getting closer to form that bottom information. The breakout on the RSI weekly looks good. We have that higher low that we were speculating is gonna help forming the double bottoming here. So far is doing that. Gold is still here at the tops. We managed to put a highest weekly close in history, but now we are getting rejected and we are printing a hive signal. I'm just curious if this hive can go to the 21 weekly. For that, I'm gonna show the levels, and the target is more or less the 21 weekly. That's twice the ATR weekly level, so that can bring dollar to 3K to meet with the 21 weekly. Now going into Nasdaq, we are still below resistance. We are attempting to break beyond that, but still not successful after 3 weeks. For the day, general markets is looking more biased towards bearishness as we approach the FOMC meeting. I still ignore, I was trying to do some research on the news of why people are approaching the FOMC meeting with so much fears, if there's something really specific that people are interpreting, but so far I couldn't find anything. Let me know in the comments if you can find something that you can share. And if you want to trade any of these coins using $500 for free and get to keep the profits, there is a position airdrop that I'm currently promoting with BuyBit. The link is in the description. You open the link, you click register to claim, and you trade any of the coins in this list, and you get to keep the profits. Thanks so much for watching, and I'll see you in the next one. Take care. Bye bye.